Banter!
Crypto Banter for you. This is Crypto Banter. This is Crypto Banter. This is Crypto Banter. Crypto Banter for you. This is Crypto Banter. This is Crypto Banter. This is Crypto Banter. Crypto Banter for you. Smash that like.
Crypto Banter for you, and then one big green candle on the Bitcoin chart. And it's happening on a Friday, guys. I mean, we used to, for the last 5-6 weeks, Fridays have been hell for Bitcoin, for crypto, and weekends have been hell for Bitcoin crypto. Have we broken a trend? Are we actually going to start seeing a break in this bloody weekend trade? That's what we're going to be talking about today. And is it actually caused by whale manipulation? Because there are theories that the whales are manipulating the markets on weekends where the volume is low and it's easier to manipulate so that they can make money. That's what we're going to be talking about today, guys. So, welcome back. Welcome back to Crypto Banter. If you're new to our channel, welcome to the most profitable crypto channel in the world. Now, I know people are going to challenge us about this whole thing around profitable. And I've actually already seen it. Like, I've already seen, yesterday we laid down this banter challenge and we said, if you're going to tell people what they should be doing with their money on the markets or help people, then maybe put your money where your mouth is and let's see what your actual returns would be in a transparent environment. And we call this the Banter Challenge. Some of the YouTubers have said, great, we're in, we want to do this. And others have said, well, we don't really want to do this in a bear market. Let us know what you guys think. Let us know if it's the right thing to do right in the bear market. The way I see it, in the bear market is when you need to be able to prove yourself. Everyone was making money in the bull market. And the difference was whether you were making 400% or 500%. But the real challenge is making money on a sideways market. And that's really where we think that people are going to start differentiating themselves. A monkey could have made money on the markets in the bull market. You just had to pick any token. But now is where it gets really interesting. And that's really what we're going to be talking about today. How you can trade this market, what the best strategy is, are the markets being manipulated? And today, we have the biggest banter we've had in a while. Like when you have a party and you invite some of your friends and then they all come and you haven't catered for enough of your friends. Well, that's what's happened today. I thought, bear market, people aren't really that interested in the market anymore. There's better things to do. So I invited all my friends and I only have 5 friends and I invited all of them and they all came. They're all here today. So if you're new to the channel, welcome. Smash the like button, smash the subscribe button. There are a million reasons to join this channel. One is we do bring you 2 streams every day. From next week, we will bring you 3 streams on some days. And by the end of, I would say the end of July, we'll have 6 hours of streaming content every single day. By the end of December, we'll have about 12 hours of streaming content every single day. We're going to build a Bloomberg CNBC of crypto, where you can just log in at any time and just listen to what's happening on the crypto market. So subscribe to this channel, like this video, because now that there is less interest in crypto, YouTube isn't circulating the videos as much. So what you need to do to help us is smash the like button, and that circulates the video. And then I know we are going into a long-term beard market. Let me know if I should shave it off, or let me know if you think it's time to shave off the beard. Some people have said keep it. Some people have said don't keep it. Other people have said keep it until you get into the new studio. Other people have said keep it until you get to the end of the beard market. Well, I am on the way to the studio. I'm going back to the studio next week. Right now, I'm in Mexico. I'm leaving this incredible place, this Garza Blanca. I must tell you about yesterday. This guy, Dallas, is an absolute legend. He rented out a yacht, but no ordinary yacht, like a huge super yacht. And we went from Cancun to Isla Mujeres, which is an island just off it. And it was a yacht, 2 wave riders. He's put me up in this amazing penthouse that you can see behind us. So it's been amazing. And that's really the power of community. And as soon as the lockdowns are gone, we're going to do a Banter World Crypto Tour where we're going to come into your city and host meetups and stuff like that. Anyway, let's get on with the show today. Let's talk about how it is that we are seeing a green candle just before a weekend and how amazing it is. And to do that, I've got all my friends. I have Mr. Biz. Mr. Biz, welcome, man.
Ren, how you doing?
My man, I have to, before we even get on with the show today, I read a very interesting statistic, which I think I need to share with you. You ready for it?
I'm ready.
Okay. Did you know that Cardano toppled Bitcoin to become the most held crypto on eToro? Did you read that?
No, I'm not surprised, man. You know, people using eToro, you know, they're not the smartest people in the world. Makes sense. You using eToro, you know, you can't be that smart.
Why is that? Why do you say that?
You know, the hardcore crypto people, man. You know, we're not out here using eToro, man. We're out here using the exchanges. We're degening on Uniswap. But listen, I look. Cardano's had a really good marketing campaign. You remember the tweet that Charles Hoskinson did July 26th of last year that everybody retweeted and killed them, saying that 1 year from now we'll have 1,000 dApps on Cardano and we're doing this and we're doing that. And listen, you know, the price has been doing well, but I still don't see any technology. So let's see what happens when they actually release smart contracts.
Alrighty. Now we're going to bring in 2 new guests this week. So we do have Alex Mashinsky. Alex, how are you, my friend? Welcome back. You were here on Wednesday, I think.
Yeah, good to be back.
Are you excited about a green candle on Bitcoin before a weekend?
That it's too early to celebrate, but like you said, there's a lot of manipulation. I think the regulators are actually starting to crack down on that. So hopefully we'll see an end to this weekend mania. You know.
Okay, so the next guy that I want to bring in, he used to be very, very, very prevalent in the crypto markets. Very, very good guy. He used to be the master of crypto. Unfortunately, he gave up crypto and went to he got a job. He got a job. He got a job at McDonald's, actually, funny enough, through the bear market, and that is Winston Wolf. Winston, how are things at McDonald's?
Can I take your order? Would you like fries with that?
I'd like to supersize that, if that's okay.
Yeah, look, I get a little bonus for all the upsells, so please, anything makes a difference at this point in time.
Do they get a bonus for upselling you?
That's what my manager told me. I haven't actually made it through yet, so we'll see.
Amazing. Winston, before we get on with the show, are you good mood, bad mood? Are we talking to bullish Winston or bearish Winston?
Well, I think the avatar picture might suggest a little bearish still.
Oh, goodness. Alrighty, and then, okay, so this was a tough one to bring on because I was scared that you guys would all throw stones at him after watching him on BitBoy Crypto show, where he was very negative about Bitcoin. And then I knew that if I do bring him on, you guys are going to have a lot of questions for him. So I've got Richard Hart with us. Richard, welcome, man.
Not negative on Bitcoin. It's just doing the same stuff it always does. That's normal. You guys don't like buying an 85% dip. You get rich that way. It's good.
You're not negative on Bitcoin, but you told me that it's going down to 10K.
Well, yeah. So you should have sold the top when I called the top on Twitter on the day.
Okay, so this is going to be a big banter. And then who else have we got here? We have Elio Trades. I can see Elio Trades. Elio, good morning, my friend.
Morning, Rand. Thanks for having me.
Is your camera not on because it's early morning for you and you're lying in bed with a cup of coffee?
I haven't had my my makeup done yet, but I'll do my best to bring the good energy.
Elio, I must say, you have been streaming a lot these days. Welcome back, buddy. I must say, I'm thoroughly enjoying your streams again. I think you've nailed it in terms of the content, and I think you've kept them short, 20 minutes, 30 minutes, which is amazing.
Yeah, I'm just, illogical, and I like to put more energy into content when no one's here in crypto land and everyone's left. But I kind of like that. I think you build better communities in the bear markets, better products. So it makes me a little more excited. I think when everything was pumping and everything was super illogical, it kind of, it's hard to feel like you're adding as much value.
So I'm interested to understand that because a lot of people say it's better to build in a bear market. Like, Tom, give me more insight as to why you're finding it much easier to build. I would have thought specifically when you're building content and you're appealing to a mass audience or to a bigger audience, you would want a bull market.
Well, I think it's just a question of who you want as your audience. If you want people who heard they're going to get rich overnight and don't know how to spell Bitcoin, and you want 100,000 of them overnight, then you can get that in a bull market really easily. If you want people who want to be dedicated to the space, want to learn about real products, and actually want to be here for a while, I think those people are assets to your communities. I think that they end up sticking around and growing. I mean, you can think of the communities that grew through the bear markets, like the Link Marines and those guys. Those are the best communities. So those are the people who you want around your channel, around your coins, everything. So I think this is a great time to see who's here for the long term. It's also a great time to find talent when you're not seeing interns get paid 300 grand a year. So it's a really nice it's a nice little respite from the storm.
Okay, now let's get that brings us onto something that we should talk about. Have we shaken out the weak hands from this market? And if we have shaken them out, is it healthy? Are we back in a healthier market? Richard, I see you nodding.
Well, I mean, these are reflexive closed loop systems. You don't have base demand. You don't have to buy crypto to pay your rent. You don't have to buy crypto to eat. People only buy crypto to get rich. And so when the price is going up, people keep buying. Then as soon as you get punched in the nose hard enough, and we've been sitting down negative 50% for months now, people start losing money. So they sell. So they start losing money. So they sell. So they start losing money. So they sell. And then you finally bottom. And it does this every 3 years. Every 3 years, it drops 85%, goes back up 20x on Bitcoin. And so it's just normal, right? You need people to buy tops and sell bottoms, because where do you think the profit comes from? Where do you think everyone's getting rich from? It's a closed loop system. You're taking someone else's money. So if you don't have oscillations and price volatility, people don't have the opportunity to buy tops and sell bottoms and enrich the people that bought bottoms and sold tops. That's it.
Okay, so does that mean that we're in for an 85? Is this the 85% correction, or is this a breather on the way up to the top?
You already had the world's richest guy all in and buy. You already had governments buy. You already had the Israeli retirement fund buy. You already had every single possible giant whale buy. Okay, so who are you waiting for? Who's next?
Alex, what do you think?
Everyone bought.
Well, I predicted it exactly. No, I'm just kidding. I just love that video.
Wait, hold on.
Exactly as I have been predicting.
So, I think most institutions, most corporates have not yet touched crypto, right? So most banks have not touched crypto. So I would say that we're still at less than 1% penetration worldwide. And the question is, we talked about that, Ron, in our last show, that new account signups, first-time users, people that hold one Bitcoin or more are all at all-time highs, growing the fastest they've ever grown. So yes, we have a correction. I think Richard and I agree that GBTC is going to bring prices down for a variety of reasons, but I definitely don't see it going down to 10,000. I think we're going to have new all-time highs this year.
Well, let me tell you, the GBTC thing is super important. The reason the Bitcoin price went up is because Wall Street FOMO'd. How did Wall Street FOMO? They didn't buy Bitcoin. They bought shares in GBTC that has never sold a Bitcoin. They just buy it. They never sell it. It's amazingly bullish. It's awesome. And people would harvest the premium. So people, because they wanted these GBTC shares, because their limited partnership agreements don't allow them to buy spot Bitcoin, so they have to incur the extra counterparty risk of buying middleman Bitcoin, which is Grayscale Trust GBTC. It created a premium. And usually that premium would be about 20 cents. So you would buy shares in a private placement from Grayscale, and then those shares would age for 6 months. And when the 6 months lockup was over, then you could dump on the OTCQX market at the 20% premium and just harvest that 20% premium forever. And your price risk was just, the underlying Bitcoin price or share price, which is usually kind of tied to the Bitcoin price. And then because Bitcoin is usually going up, now you made the returns of the Bitcoin gains plus the returns of the 20% premium. And that was wonderful. And it was so wonderful that GBTC became one of the most profitable entities on Wall Street because they charge, 1% a year overhead. And they have 3% of...
You're being super nice. 2%, yeah.
It's insane. So they're making 2% a year on a fund that owns 3% of all the Bitcoin.
600 million a year in fees.
There you go. Every year. And so that was absolutely easy to on-ramp new users to buy fake Bitcoin from GBTC when there was a premium. But a few months ago, the premium disappeared and it went into a deficit. And so now if you're a GBTC holder attempting to recoup your investment, you've got the Bitcoin price dropping and you can't even sell your shares for what you would have been able to sell Bitcoin for. You have to sell them for 10 to 12% less. It's been as low as 20% less. And so as long as you can buy discounted middleman Bitcoin from GBTC, why would anyone that isn't afraid of the counterparty risk buy expensive real spot BTC? And so that deficit in the GBTC is going to continue to suck away demand from real spot Bitcoin. And so until that deficit goes away, these guys, they were the whole bull run. Like GBTC was the whole bull run, basically.
And just to add to what you just said, there's a $20 billion line in the Roach Motel called GBTC waiting to come out. Meaning if even if the discount shrinks a little bit, all those guys that they bought it on margin, they didn't just buy it 1-to-1. They went and took 4-to-1 loans, bought it on margin, and they're dying to get out, right? So that discount is going to be there for a while. It's not something that disappears tomorrow.
Because it's on a lag. There's latency of 6 months.
All right. So, Coach, that mean, first of all, welcome, my friend. Sorry, I didn't see you in the waiting room.
I love your beard, man. It's awesome.
Is the best trade in the market now to buy GBTC shares and get Bitcoin at negative 12% today? So basically,
if you want to arbit, I guess. If you think it's going to stay there, then you could arbit for sure. Is it the best trade you could make? I mean, depends on who you are. Depends on how much patience you have.
It's like like an oscillator. Your oscillating indicator can stay pegged for a long ass time. If you thought a 10% discount was a good deal, wait till it's a 30 or 40% discount. Boy, it'll be a good deal then. And Bitcoin will be dropped at the same time. You guys, everybody already bought. People were buying JPEGs for $1 million. It's time for them to all lose their money now. You don't get to be rich buying JPEGs for $1 million. I'm sorry. Reality doesn't support that.
All right.
I agree with you, Richard, man. I don't think there's enough dry powder left for pushing the market so much higher. It's like, who's going to buy it? That's the question.
Wolf, what do you think?
We've had this conversation a few times before, and I think what has stimulated previous bull markets is recycled capital. And as we were talking on the show, I don't know, a month, two months ago or something, like a lot of people were making money off these private deals. They're using the money they made on that to put into other deals, and that kind of keeps the bubble buoyant, if you want to call it that. And what we're seeing now is that, these deals aren't coming out, or people who put money into those deals previously, the projects are delaying things, and the capital's just drying up. And, Coach said it before, it's this dry powder that's needed to be fired to keep things going up, and it's just not there at the moment. So I'm in total agreement with these guys.
Yeah.
I see one thing. One thing could be there's lockdown starting, and maybe that would lead to another stimulus, which could lead to more money coming into the markets, which would make sense based off of what they've been doing in the past. That's the only thing I think is a positive.
I don't think there's another lockdown coming in the US. I think there may be a lockdown coming in Thailand and in South Africa, but I think the US is vaccinated and ready for business, and there's no lockdown coming in the US. And the biggest stimulus packages in the world come from the US. No one cares about a stimulus package that happens in the middle of Africa or in Thailand. I mean, let's be realistic. But I think let's just close off this GBTC thing. I agree with what Richard said, that GBTC actually was the bull market. If you look at the stats, the biggest buyers during the bull market, the only buyers during the bull market were GBTC. And you can see quite clearly when GBTC stopped buying and the premium started to turn. That was around March, April. March, April was when this whole turn started to happen. And that's really when the market started to show weakness. So question is, I mean, do we have to now wait for this GBTC thing to dry up? This could take months. It could take months for people to offload their position. They're not going to offload their position in one day when the shares release. They've been holding for 6 months. To hold for a 7th month or an 8th month or a 9th month is not a problem.
Well, so you don't need to hold for 6 months if you bought GBTC in the open market. The only time you need to hold for 6 months is if you contributed Bitcoin as an institution. If you contributed Bitcoin and you got basically OTC shares, the rule 144 that restricts you for 6 months. So anyone who wants to trade this, and I would say maybe 20% of the people in the United States know that GBTC is equivalent to Bitcoin. Most crypto savvy people just trade on exchanges. They don't swap between GBTC and Bitcoin on Binance and so on. So while I agree that it's definitely pushing us either higher or lower, I think all these public companies that are doing reverse mergers through SPACs or IPOs, we saw Circle, we saw Bullish, we saw Riot Blockchain. All these companies are basically sucking into trillions of dollars that were printed by the Fed, and that's your new source of capital. All those companies are going to do exactly what Michael Saylor did and start printing billion-dollar tickets to buy Bitcoin, because that worked very well, right? All those companies are trading at a premium. It's the easiest way to create money is just to tell your shareholders you're buying more Bitcoin, or not sell Bitcoin as a miner. It's the same thing. So I expect, you guys are saying there's no capital. I'm telling you, there's trillions of dollars still trying to get into this market. And now we have about a dozen vehicles that will allow them to come into the crypto market from the stock market.
Okay, I agree that the macro position's great, but there's other things people forget about, like Mt. Gox. Mt. Gox has 140,000 BTC just waiting to come out. Eventually, one day, it is going to come out. And go do the math on how much money 140K BTC is. What is it, like 6 billion or something like that? You're going to need a whole lot more Michael Saylors and a whole lot more Elon Musk. You're going to have to start breeding them in a farm.
Yeah, but I don't think it automatically. It's not going to be sold automatically. It's not like they do a distribution and everybody runs and sells their Bitcoin.
Okay, so let's segue this discussion and say, okay, we know that there is a lot of Bitcoin that could potentially come in the market. There's a grayscale, let's call it a grayscale overhang. There is a Mt. Gox overhang, but we have a whole lot of new buyers. I mean, we didn't have corporates buying Bitcoin. We potentially have an ETF. I mean, listen to this and let's talk about a Bitcoin ETF and whether that could bring some more buyers.
Yeah, and once that happens, what is the right regulation? And the ETFs are probably coming. What that would probably help at this point? Is it months away? What do you think?
No, I think it's probably first quarter of next year. Is just my intuition. It could be fourth quarter of this year. But it feels a little further along. You get into a new job like Gensler, there's a whole lot on your plate, and how you prioritize things. I'm guessing a Bitcoin ETF wasn't at the top of his list. I know they're working on it. There are 13 or 14 applications. They've got to get to it. I do know Gary wants to be smart and be seen to be smart. And so he will get to this stuff. Whereas, the old, Chairman Clayton just didn't want to deal with crypto.
All right, so the Bitcoin ETF, is it coming this year, Alex?
Look, there is, I think, 6 or 7 billionaires who applied for a Bitcoin ETF, right? Kathy Woods and the Winklevoss twins and Mike Novogratz and so on. So they're putting tremendous pressure on the SEC, both political and otherwise. And I think you're starting to see the crackdown on some of these market manipulators. You're seeing indictments. You're seeing countries chasing people like Binance and others out of their jurisdictions. I've never seen, a country proactively announce that some company is not domiciled in their country, which is what the Cayman Islands just did with Binance. So I think it's definitely coming, but I agree with Novogratz that it's going to take some time. But until they actually approve, they're going to approve probably 5 or 6 applications at once.
Oh, wow.
Raise your hand if you know somebody that can't get their money out of Binance because Binance stole it from them.
Well, I can see that Wolf's hand's raised and Elio's hand. I can't see it. Yeah,
you can send as many hostage videos as you want. You ain't getting your money.
Okay, whoa.
Yeah, you could see that with my Liddy Capital videos, where they told me to ask the scammer that we knew who it was to actually send my money to me. they actually said, if we can get him to send my money back to me, then it's okay. That was their prognosis in my case. It's great.
Guys, is there another risk in the market that we should be talking about? Elio, should we be talking about a risk called Binance risk? The reason why I say that is there's been a lot of FUD headlines. I mean, if you read below the headline, you kind of realize there wasn't much substance, specifically in the UK one. But is there this thing called Binance risk, where regulators actually clamp down on Binance? Binance currently is the biggest exchange, both in terms of trade and in terms of assets held. And all of a sudden, we've now got a regulator seizing billions and billions and billions of dollars worth of our assets if your money is on Binance. Elliot, do you think there's a Binance risk in the market today?
Well, I mean, I would say that there's just a regulatory wave coming, and that, when we step back and look from a longer term perspective, it's bullish, but short term, it's probably going to send us down to the ultimate low of the market in the bear market. Look, it's going to be part of it. We know, like with the TikTok generation coming into crypto, it's become quite unhinged, and so I think that it's inevitable, right? We'll see what happens. I still maintain that regulation is bullish, but anyone's guess what will happen with something like Binance. You guys, probably Alex would know better than I would.
So I do agree with you that regulation is bullish, but regulation is actually something that is forward-looking. So regulation says, look, we're putting in a law, and from the time that this law is in, you can do this and you can't do this. What I'm worried about is Binance has operated in many, many, many jurisdictions. It's been the biggest exchange in many jurisdictions. And you can say that they took a slightly more risky approach than Coinbase did in the early days. And what the media...
I think it's bullish. If you can't get access to your coins because they got shut down, you can't dump the market with them. So if people's coins get seized, it's bullish for the price. It's not bearish. That's how it is.
Richard is right.
If they were sitting on a lot of cash that was going to buy and that got seized, that would be bearish. But they're not sitting on a lot of cash. They're sitting on a lot of on coins.
Look, the UK, as an example, what the UK published, right? The FCA published, they didn't even create a new law. They basically said, here are existing laws that we from now on applying to Binance. And that's why Binance is not operating legally or within legal constraint, right? So I think what regulators are really...
Alex, I have to correct you. That's not what happened. They spoke about an entity called Binance Markets, which is an entity that Binance bought in the UK, which was not called Binance Markets. The name escapes me. They changed the name of that entity to Binance Markets. Binance Markets does not operate under the Binance.com website at all. And all they said was, Binance Markets may not operate without the correct licenses. And
that's in the UK. But the problem, there's two separate things. One is that Binance.com allows UK citizens to buy on margin, right? 100-to-1 margin, even though that conflicts or is illegal in the UK. Same thing the Chinese said about the same thing. The Japanese said, the Americans said, hey, Binance, Binance.com, you're not allowed to do this. And that's why Binance.us does not offer any of these services. So there's two parts to it. You're right about what you said, but what they're climbing down on is on this 50-to-1 or 100-to-1 leverage, because that's where most people lose their money. They think that they can detect a trend, they put it on leverage exactly like they tell them to do, and then they get wiped out.
If you want to,
exactly as I have been predicting.
If you go on the top at eToro.com, which I actually suggest no one ever visit the website, but if you do happen to do that, right at the very top it says 67% of all users lose money with us. And that hides the fact that the losers that lose much larger sums than the winners that win.
It does really say that.
It's a net negative game.
It really does say that.
It doesn't say that? It used to?
It does say that. There it is.
Yeah, okay.
Yeah. Yeah.
If Richard Hart says something, that shit's usually true.
All right, let's move on. So on the one hand, you're seeing this demand for Bitcoin dry up. On the other hand, you are seeing a lot of building. You're seeing blockchain actually really start working. There's a ton of building. if you guys read this NFT report, which came out sometime this week, it was done, I think it was published in Reuters. I don't know who did the report. But I mean, NFTs did $2.5 billion worth of sales in the first half of the first year that they have ever actually really been commercial. That number is forecast to be around 4 billion in the second year, which means that if the numbers are right, you're talking about $6.5 billion in sales in a brand new industry in the first year. This is built on Ethereum. At the same time, you have DeFi, which is working and is on Ethereum, and institutions are starting to ape into DeFi. At what point does the market say, you know what, Bitcoin, you have your problems, you got China, you got ESG FUD, there's no institutional demand for you, but hold on, there's Ethereum and there's NFTs and there is Cardano and there are some things that are working. At what point does the market turn around and say, there is Bitcoin and it should be uncorrelated to what's actually going on in all the building? What do you think, Elio? Because I know you're in the space and you're as excited about in the space.
Well, look, I've been believing for a long time that the application layer on top of blockchain is probably going to be the only thing that brings people in for non-price discovery reasons, and we still don't really have applications. I think I saw even in DeFi Mania, there was something like 1,000 or 2,000 wallets actually using DeFi. Everyone else was just speculating number go up. And so as much as we've made progress this bull run, we still do not have, hit products. And, that's, I'm a big believer, I've said for 4 years now, that video games, good ones, immersive ones that actually have in-game economies built on NFTs, that is going to bring in the first mainstream wave of a new generation of users that don't know or care or are concerned with the price and price of Bitcoin specifically. And that's going to create a sustainable trend of holding and growing users, people who use things for intrinsic value. You're seeing a little bit of it with MEXC. Obviously, this is powered a lot by a play to earn model. That's, mostly finding a home in third world countries. Hopefully that's sustainable.
MEXC is buying NFT avatars, if I remember correctly.
So MEXC is you buy these characters and you play them, you fight them against each other. It costs a few $100 minimum to get in, and you can earn 20 to $30 a day or something doing it, because they have a coin that they incentivize players with for playing. And right, that might not be sustainable if prices go lower. It'd be interesting to see how that goes. However, MEXC is doing something like $24 million in volume per day on their marketplace. It's bigger than all of DeFi. I saw some charts showing it was bigger than synthetics. It was bigger than pretty much the revenue coming out of MEXC. I saw a chart showing it was bigger than all your favorite DeFi apps. And they were something like banking $1 million into their treasury per day. Pretty astronomical. It puts it on par with most of the big AAA games, not quite Fortnite, but somewhere in the Dota range. Look, I'm a big believer in the gaming industry controlling more and more of internet culture in our lives, for better or for worse. And I'm a big believer that NFTs in gaming are going to be 10x the in-game item economies. Until we see hit products, we're still in a speculation mode, and not much is different from this run to the last. So a big retrace from the highs is most likely if we can't get product adoption. That said, I'm still on wait and see for the last month or so. I've just been, as I've told my audience repeatedly, in stable coins. If we go back up, we start breaking 50 and it looks like we want to try higher, then I'll start allocating again. If we break way lower, that's great. We'll get some really cheap Ethereum and Bitcoin, and we'll ride that wave back up over the next couple of years.
So Ilya, I want to touch on what you said over there, just before anybody. So if you look at what you're saying that you think that NFTs, the biggest application is going to be gaming. If you look at what the market looks like now, it's collectibles, collectible and sports dominated the first half.
Games are hard. Games are hard. People
haven't even really came out yet, right? There's a lot of games that we're waiting on, and I think when they come out and they have economies and people actually can earn stuff, I just think of Roblox because I have 2 kids, right, 4 and 5 years old. They can play Roblox for 4 hours a day. They get all the toys, they get all the stuff. The thing is, if you could turn that into an economy where they could actually earn NFTs or something, they would probably love that, even if they don't even know what they're worth. It doesn't matter to them. So I think that's how we slowly push into that.
I think turning kids into degenerate gamblers is a terrible, horrible, disgusting idea. I think that addicting.
It's just they earn something in the games, and they can
right.
Something for it.
I think that human beings have a consciousness economy that's already being abused by all media, all marketing, all surveillance capitalism, all got you capitalism. You barely have any attention span left. They've beaten it out of you by addicting you to likes and hitting F5 and doom scrolling all day long. And the concept that you're now going to add slot machine, loot drop, slave like a Chinese gold farm, and wow, you're going to turn everyone's kids into Chinese gold farmers now. It's disgusting. Well, the number go up game is better than the, oh, look, I bought a hat in TFT2, and I hope that people don't get bored of that game, because historically people always get bored of games, which is why I don't play StarCraft 1 and I don't play StarCraft 2, even though I've got tens of thousands of hours into them, because people are supposed to get bored of games. So any speculative instrument that relies on people continually being addicted to a game gets you wrecked. Because, I mean, where's Zynga? How's Zynga doing? How's the sending people to help manage my farm on Facebook crap? They're bankrupt. It's wrecked. So anytime you invest in a game, you're on a timer to get wrecked.
Well, that's sort of like saying, that's like saying you don't like the way things are. In the end, people are going to play games. They get dopamine releases. They enjoy their time in them. And the gaming world is only growing. They already do loot drop boxes. They already treat it and spend crazy amounts of money on games, even without the item economy. They just don't own the assets. So they have no ownership of the digital economy. They just literally spend all the money. It's a one-way street to a single entity. Instead of democratizing and allowing some other people to benefit from the item economy, to me, it's like fighting against gravity, right? It's already there. And
you can win against gravity. Steve Jobs won against gravity by giving people what they didn't want, a phone without buttons. You can make people want what they should want if you mechanize and game mechanic things that are better for human beings. Like building in DeFi is better than selling JPEGs with serial numbers loosely related to them for millions of dollars that may not even be hosted on the internet anymore. That's what an NFT is. You
can wrap games on anything. It could be educational gaming. It could be fitness gaming.
There you go.
It doesn't,
I'll support that.
Sure. Well, a game is just an umbrella term, and having in-app items is that's going to happen, right? So you can make it good, you can make it bad, but saying it's not going to happen or saying it's wrong,
which should be illegal. You should not be able to sell gambling to children. Period. It should be illegal.
Then goodbye loot boxes, goodbye baseball cards, goodbye Pokemon cards, goodbye everything, right?
Goodbye loot crates. Yes. Baseball cards.
Stop. Why baseball cards? Why baseball cards?
We can talk about philosophically whether it's right or wrong. The reality is that it's happening and it's huge, and I can attest to it because my kids are the same as what coaches think is happening. The question is whether the NFT market is really, really, really exploding, and whether we should look at it separately to Bitcoin. Alex.
So I think we're still experimenting with NFTs, with gaming, with a lot of the stuff. I think the one area that can easily 10x is the yield area, right? I think right now we're down. We used to have a max of 140 billion in DeFi. I think we're now down to like something like 70 billion. And that could easily 10x, right? Especially with all these new bridges that you're seeing being built into traditional finance. So yield is something that every person on the planet is still looking for. You don't need infrastructure. You don't need all kind of, you don't need to wait for this or that to happen. It's already happening right now. It's a question of more like, are we going to have rug pulls? Are we going to have more of these bad projects that's going to scare people away? Or are we going to find a way to basically create a walled garden that protects the depositor and provides them safe yield instead of risky yield? And if we can solve that problem, that by itself can carry Ethereum to new all-time highs, right? So I think, again, Bitcoin is store of value. We talked about that. We talked about what are the drivers there. You do need new buyers. I agree with everything that was said. On the Ethereum side, you just need what already exists to 10x, right? Those are the drivers in my view.
But how does that happen, though? And that only happens.
It's already happening.
It's going to happen no matter what.
It's happening, and I think we just saw JP Morgan say that staking could be $40 billion in a few years, right? And so when you have banks talking ETH 2.0,
what did they say that how much it can be?
40 billion.
Oh, okay. I didn't hear the number because I already have we have several billion on it already. So sometimes these guys talk about they don't even know how much is in it right now. Look, just to throw some numbers, right? We are just one company in the space, right? 17 billion in assets. We have several billion right now in DeFi. We're adding about 50 million a day, and I don't see any slowdown. I don't see any anyone kind of withdrawing withdrawing their assets because the price of Bitcoin came down.
The price is going down, but the activity, that's what I'm saying to you. The price is going down, but the activity on the networks themselves is growing exponentially. Elio has just told you that is happening in NFTs, as this report said. You're just telling us that it's happening in DeFi. So that's what I'm saying. You have Bitcoin, which has...
Let me, Laurent, let me just clarify. I'm saying that NFTs or gaming cannot lift these coins to new heights. NFT or gaming by itself is not going to get you Ethereum at 5,000. But DeFi can all by itself. You don't need anything else. If DeFi goes to 10x's from here, Ethereum is at $5,000.
Richard, what do you think? I know you're not a big fan of Bitcoin.
I agree exactly what he's saying.
Is this because you're saying Bitcoin is a store of value asset? It's a technology that hasn't innovated in a long time. People buy Bitcoin to get rich, but people are actually using Ethereum.
Yeah. Yep. True.
Yep. That's
Wolf, what do you think?
Obviously. Like, I mean, look, let's say you want to de-risk and get into a stable coin. You're in Bitcoin, start going to middlemen and begging them that when you send them your Bitcoin, they're going to give you some fiat back. That's the opposite of what Bitcoin is invented. Bitcoin is invented to get rid of middlemen, to get rid of counterparty risk, to put you in charge of your finances. Anytime you have to send your keys to someone else, you're in a bad spot. So in Ethereum, if you want to de-risk and you want to get into something like a stable coin that's similar to having a bank account, you can just, in the same network, in Uniswap, with no counterparty risk at all, and the thickest order books in all of crypto for ETH USDC pairs, you can just swap your ETH and use 1 inch or match it out of XYZ because you're going to get better order execution because it spreads it across Uniswap, SushiSwap, and a bunch of other automated market makers. You know, you can get de-risked and you can get into stablecoin. Now, you still do have the counterparty risk that Circle and Coinbase could jack you for your money, or the bank could jack them, but that risk is relatively similar to the risk that your bank just directly jacks you. So it's a vastly superior system to what you have in Bitcoin. And then just the idea that you can trade trustlessly without Binance stealing your money from you on a decentralized exchange, that's worth more than I think Bitcoin's entire value proposition, to tell you the truth. I think decentralized exchange is worth more than peer-to-peer digital cash, which didn't get any adoption anyway. No one uses Bitcoin that way. So replacing exchanges with peer-to-peer trustless systems, huge value, huge value. And unfortunately, there's a token. So Uniswap's an amazing invention. And then they duct taped a token on that actually has no relation or effect on that system whatsoever. And then people FOMO it because it has the same name. But there's no relation. The systems have nothing to do with each other. You're like, okay, love crypto. Just duct tape that token on, homies. I mean, hey.
Wolf, what do you think?
Airdrop all millions on it
for free.
Winston, what do you think?
I think BTC is a boomer coin. And like you guys have been saying, it's got extremely limited use and utility. And
look how bad this price is.
Like we've been speaking on the show a long time about ETH. ETH has an actual use case. And while that use case may be limited, you know, somewhat almost entirely to the crypto ecosystem at this point in time, it can live outside it. All this stuff that's happening with BTC and El Salvador and governments buying and all that sort of stuff, that's just PR, meme sort of stuff. Like Ethereum is actual real people, real usage, real tech being built on it. You know, like.
Okay, so hold on. I mean, if we were to take out Bitcoin and say whatever Bitcoin's market cap is, 650 billion, whatever, I don't know what the number is now. If we were to take out Bitcoin, remove it, and not even put it on coin market cap at all, and just look at the altcoin chart, so the total market cap x BTC, should that be in a bull market?
Well, look, there's more bullish stuff going on within the Ethereum style ecosystems than there is with BTC. I mean, BTC is stagnant. Like, what do we look for with this? We look for like more uses of an already limited use case. Whereas when you look at something like Ethereum, people are building and creating new use cases. So yeah,
so I can tell you why.
I'd like to honestly. I mean, like we sit here and we talk about all these awesome projects and all this stuff that's being built on Ethereum and that sort of stuff, and then BTC comes along and gets moody and wrecks the day for us. So like price wise, And I'd be more than happy to have no BTC in my life.
It's the rich guys circle jerking each other like Bitcoin Miami. Rand knows what they were talking about. Rich guys talking about Bitcoin. The price of Bitcoin doesn't matter. Two minutes later, Bitcoin's going to go to $1 million. That's all it is. It's a circle jerk.
I can tell you why they can't flip, or like I can tell you why they're correlated in a way that I figured out why they're correlated, and no one else seems to know why. It's the liquidity in the order books. So the reason that Bitcoin pulls the whole market down with it is because the order books allow you to exchange one thing for another. So you could trade your Bitcoin for your Ethereum. And since they're interchangeable, if the price of one thing goes down, it makes less valuable the thing you could have interchanged it with. And so it's the liquidity in the order books on certain pairs that tie certain coins together. So the reason that the Ethereum price is so reflexive with the Bitcoin price is because there's massive amounts of liquidity in ETH BTC pairs in spot exchanges.
And then to add on that, Richard, then you have all the liquidity of ETH on all of the Uniswap coins. And as ETH comes down, their liquidity is actually drying up because ETH is going down in value as well. So it's like a full correlation across the board. So then traders or people who think they're traders come and they look and they're like, wait a minute, it's dropping. I should sell because it's dropping. And then everyone just, it turns into this massive, someone's pulling liquidity because ETH dropped by 30%.
There are some people that have coins that are designed better that go up when everything else goes down.
Okay,
because they figured this shit out.
Great segue. We're not going to talk about Hex today. We are going to talk about Hex another time. We're not going to talk about Hex today. Because I know Hex has got the best performing chart, and we can have a chat about that. But I don't want to do that today. We promised to do that today.
I know.
But if we remove Bitcoin and we say, okay, Bitcoin has been 60% of the market, 50% of the market, 40% of the market, and what you guys are all saying is that it's a boomer coin. That's to quote Winston. The rest of you are saying that it's old technology. That's to quote Richard Hart and a couple of others. Should we be looking at a chart that looks like the one that I've got on, which is the total market cap excluding Bitcoin? And then should we say, look, let's forget about Bitcoin. What should we be investing in now? What is cheap now that actually may be used? In other words, Ethereum. Should we be looking at Polkadot? Should we be looking at Cardano? Because they've all been moving because of what Richard says, which is the liquidity pair against Bitcoin. But let's remove Bitcoin. Let's imagine that Bitcoin doesn't exist for a second. Is there anything right now that is worth buying under the assumption that we're not worried about fluctuations in the Bitcoin price?
A lot.
Most of these things you should be buying.
No, I wouldn't say most, but I'd say there's a lot. There's definitely things like, for example, Celsius was a great buy in the bear market because it always makes money. So if you're going to buy it, it's going to go up in value because they redistribute their profits. Right?
A bear market. Celsius just went up.
Yeah, so there's no bear market. Even if you're going up, though, there's places where you can store your money that are undervalued because of the dump. Like there's anything that does what Celsius does, Nexo, Yield App, Anchor, all these guys who do that, they're massive assets to this industry. And that means that if I'm not a trader, like Richard hates people that trade, right? So if I'm not a trader and I don't know what I'm doing,
no, I don't.
He doesn't hate people.
I just know you're going to run your life that way, but I mean, I support
you hate people trading that don't know how to trade and losing their money. That's correct. Now, but the point I totally forgot now. The point is that we have to look at what companies actually generate revenue that go back into their coin, what token supply flow models make sense so that even if there is a bear market or whatever, it still is going to be a profitable like supply flow. And that's what I look at first and foremost. So I'm looking at projects like that.
That's a great example. And I'm going to be the only one who's allowed to bring this up. I'm not saying that I am a Hex supporter or not, but I am saying that Hex has continued to go up during the bear market. And I'm saying the same thing about Celsius. Celsius hit an all-time high when straight after the biggest dip we have ever seen in Bitcoin. Celsius in an all-time high. So that means that there are some pockets, for whatever the reason is, where the price is starting to decouple from Bitcoin and the major market moves.
I can tell you another one. In 2017, during the bear market, EOS did a 40x because it was a new project.
Okay, so
new projects and bear markets seem to overperform.
That's
to Elliot's point before, when you go sideways or you go into a bear market, we really separate the real projects from the froth and from the hype. and so on. And we just had too much froth and too much hype. So it's very hard for most of these people that joined crypto, right? Most of them joined in the last year or two. It's very hard for them to know what's real, what's not real. So the side movement is actually a good thing because it kind of flushes out who is performing, who's continuing to delivering, and who's just talking and who's just hyping, right? So there's a lot of big projects, huge market caps that still have to deliver. They didn't do anything. They're in the top 20, but they didn't do anything. So
I have a question, Alex. Do you know the other 89 projects that actually hit an all-time high that were around from last bull market? Because only 100, under 100, we did analysis, under 100 actually did it, that have a real market cap of like,
give us some names. Give us some names, Coach. Give us some names.
There was Celsius, SNX, Link. I can't remember all of them off the top of my head, but those would be the three that would definitely stand out. Like, and I think there's one called Hex, maybe. I think it came in during the bear market, so I don't know if we can count that one yet.
Coin that Sean is talking about on this show, but shall be spoken about next week on Crypto Banter.
Yeah,
all right, so
absolutely.
with that in mind, we've got 10 minutes to go. There must be stuff that you guys are looking at and saying, regardless of the market, these tokens are going to perform. What are they?
USDC overperforms in a bear market too, bro, and then you can buy the dip, you know. So you don't have to. If you have to chase yield, then you end up with misinvestment and mal investment. I mean, if you read Diaries of a Stock Trader, he tells you most of the money is made by sitting still and waiting and not, trying to massage your position or move your stops or just wait. Look, bear market, the last bear market lasted 365 days to the day. You can wait a year, man. We're already a few months in. We're already 3 months in. What are we going to get? 7-8 month bear market? Chill. You don't have to FOMO mediocre plays and take risk in a bear. Longing in a bear is stupid, and shorting in a bear is stupid too, by the way. You will get your ass liquidated. If you short crypto, you will get scam wicked and liquidated, and then the market will do what you thought it was going to do anyway. And then you'll feel real bad watching everyone else get rich, but you don't bother with it.
Okay,
I couldn't agree more with that.
Anybody here looking? Elia, go ahead. Go ahead.
What's really interesting, and I totally agree, stablecoin maximalist right now, the best thing to do is just chill on your stables, which USDC and self-custody is probably better than your bank, and you can actually earn a couple of points on it. And that's what's really interesting. When I talk to really rich people, they don't want to buy Bitcoin. They look at that 4, 8, 10% yield on stables, and that gets them sprung. And that's where I think there's a really interesting change from last time, which is people aren't withdrawing to their bank accounts right now from crypto. They're sitting in stables and they're earning their points because it's way better money sitting in crypto. So I think it's going to be interesting to see the psychology of what happens with all this dry powder that doesn't actually need to really get bridged back into the ecosystem. It's one click away. So I think we'll see, how long this bear lasts, given the fact that it's actually dumb to take your money out of stable coins and put it into your bank account. It's counterproductive. And that, of course, well, I mean, obviously in America, if you're following the rules in stable coins, you got to pay that anyway. But the point is, look, I'm very curious to see how itchy people get at pressing the button, given the fact that all their money is just sitting there in stables and it's not already been bridged back to the fiat system.
So here's a theory for you. A lot of institutions are looking at crypto and saying, hold on, I can get 0% at Chase or pay them 1% or 0.25%. Or I can put money into the crypto ecosystem. I take my dollars, I go to Circle, which is now going to be a listed company, and then deposit this into Celsius and earn 8, 9, 10%. Alex, what is the number now today on stables?
8.88.
8.88. Or I can take a bit more of a plunge and I can go into Anchor Protocol and earn 20%. Or I can go a little bit more.
Or Blockbank.
Blockbank, Yield App. There's so many options. It's great. You can hedge your risk too.
What's Blockbank's APY?
I think by spreading it around, you're actually increasing your risk, not decreasing your risk. Because if you got listed companies or companies that have billions of dollars on the balance sheet, and then you're trying to earn a few more points and put it in companies that you have no clue what they're doing, you're increasing your risk. So
what I'm saying is, let me finish the theory. What happens if all these institutions come in now and say USDC, 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 and then all of a sudden
drop.
Yield goes down to 2%. That's what happens.
But it hasn't yet. It hasn't yet, which means there's still
No,
a lot
we were at 12. We were at 12 just a few months ago, and we're down to 8.88, and we are the highest yield you can get. Everybody else is at 4 or 5. Right? I mean, Circle, Coinbase is at 4, Circle is at 5, Gemini is at, I think, 3.5 or something like that. So it's definitely coming down. The more money's coming in, we're definitely seeing a rush into stablecoin, but the markets, we lend to institutions, exchanges, DeFi, and retail. So we have 4 legs to the stool. Most of the guys you're talking to only lend into one market, for example, just DeFi, right? So the blended rate that we offer is higher than the rate that other people can offer, but it's definitely going to come down. You bring another 10 billion, 20 billion into this market, it's definitely going to go down. I mean, you ask what to invest in. We announced a few weeks ago, right? We put $200 million into mining. Why? Because that was an obvious thing, right? If everybody's if they're cracking down on China, do you want to lock down the cheapest electricity? Do you want to lock down all the real estate in West Texas that you can get, or you want to put more money in DeFi?
Winston, I know that you're in stables because you told me that before you went to work at McDonald's, you took your whole stack and you put it all into stablecoins. Where are your stablecoins sitting?
I'm actually not doing anything with the yield aspect of things at this point in time. I'm actually quite happy just sitting on things. As Alex said before, like there's a fair bit of risk when it comes to spreading your money around the place. And as Richard sort of alluded to before, like there's going to be more of a drop. And I'm waiting for the opportunity to buy that. And that's going to well outweigh any of the yield I'll get in this little period by just moving stuff around and managing funds.
Can I warn you guys about a way that people could lose a lot of money in stables that they didn't realize they could lose it? So there's these yield farms out there, Curve, Uniswap V3, Uniswap V2, that allow you to deposit 2 stables, and then people can trade into that and you can make some fees. Here's a problem with that. You think you're safe because you're sitting in 2 stable coins. How can you get safer than that? Let's say that one of those stables has a failure. USDT gets cracked down on, for instance. What the market's going to do is they're going to go to that trading pair. They're going to take all of your USDC, which might still have value, and they're going to give you all of the USDT, which is wrecked. And then you, even though you had 2 stables, now have a giant bag of something that's worth a lot less, and you didn't realize you could get wrecked that way. And then, so I would be very careful if you're holding stables to not play stable versus stable automated market maker pairs, because there's untold risk there for rather limited gain.
I think that's the point with everything when it comes to investing, right? And that's sort of what Alex was alluding to before, and what you mean there is like you need to manage your risk. And whatever you're doing in the market right now is about, and whether it's within crypto or outside of crypto, is, you know, make sure you have capital in a lot of different areas.
Yes.
Guys,
Diversify.
listen, I love you guys madly, but you know we can't run over an hour. So this has been one of the best banters we've ever had. I think we're going to speak to all of you separately on banter in the next 2 weeks. Richard, I know you're coming on sometime next week. Biz, I think we're due a one-on-one. We haven't had one for a long time. Same thing with that. Same thing actually with
Charles Hopkinson back on here. Let's talk about Cardano again, round 2. Come on.
Charles doesn't return my WhatsApps since the last time that you were on. No, I'm kidding. Yeah. Listen, guys, love you madly. See you guys all next week. Guys, I want you just to see, these are my friends. These are now all stablecoin maximalists. You got Coach K, the stablecoin maximalist.
Just one,
the stablecoin maximalist.
One point before we break.
Yes.
Within the side market, right, us retesting 29 and 30,000, we haven't seen any volume there. So the only thing, to Richard's point, that I'm concerned about is actually seeing some volume, seeing us supporting 29,000 with real volume. Because if there's no volume there's no support, we're going much slower.
I'd love a bear trap. I'm sorry. I would love a bull trap. I'd like to retest the neckline. Let's go hit 45 or 50. Elliot said he might get long. Let's go do that. Get him long, and then go to 10K. You know what I mean? We did that in the last pair. We dropped from 20 down to like 9,700, 9,750, and then we did make 17,450 again. So we had a huge bounce. We did not get a huge bounce yet, and they are in the game. So I would love to see a nice bounce.
All right.
Thanks, Ron.
Richard, Alex, we'll see you guys next week, guys. Thank you very much. See you guys all next week. Until then.